Good to have you, Mr. Geo Marine.
My name is Matt, by the way. What is your name?
Eric,
Eric. Cool, cool. Yeah, thank you. Thank you very much.
did you serve? Is that why it says Geo Marine?
No, no. I'm currently serving. I'm in the
Okay.
Coast Guard, actually.
Okay.
Um, but no. I really like geology, and I actually teach. It's kind of a weird position I'm in. I'm currently teaching at the Coast Guard Academy, so I
Okay.
teach marine science and oceanography. Um,
Awesome.
Yeah, so that's 93 is my birth year. So geology, marine, 93. That's
Cool.
all. Yeah.
Well, thank you for your service.
No, I appreciate that. Thank you.
Looks like you're on the East Coast.
I am. Yeah. Yeah. You're in California, I'm guessing,
Yeah,
or
I'm in
Gotcha.
San Diego. So another
Nice.
another great place for marine life and
Yeah.
biosciences.
That's where I came from,
Okay.
actually. Yeah, I went to a Scripps Institution of Oceanography for my master's in
Okay.
that subject. So,
Awesome. Yeah, I went
yeah.
to I went to UCSD. So
Oh, shoot.
yeah.
Okay.
Yeah.
Nice. Very cool.
Um, cool. Well, for those of you that, obviously this is recorded, for the people that are joining us on YouTube, Matt is a Stacks subscriber, has been watching our Stacks AI back testings for the last couple ones I'm assuming, and recently joined. And I've been asking the community if there's any sort of skills that you might be able to help me out with, because obviously I'm just doing these back testing, going through the spreadsheets, updating things little by little, and a lot of people have been able to make these little contributions here and there. But Matt here has done something pretty awesome for us. He asked me for the entire spreadsheet data and was able to run some more calculations than I would have been able to do on my own, and found some pretty awesome things that we wanted to share and let the community know, because like, number one, we all know that Stacks AI is a very powerful tool for us to use, but a lot of people always have this question of how do I use it? When do I get in? When do I get out? What are the numbers at least telling us? And just off the bat, you've already spent a good amount of hours helping us out. I really wanted to thank you for that, and for this video be able to show people a little bit more of what's going on, and have a little bit of a conversation as to what we've noticed and what other calculations we might be able to come up with in terms of what things have already been shown. Let me share this really quick first. I do have This is an email. I'll also include the sign up link for this in our description. But what Matt basically found for us here was that with the data that we have, he extrapolated these numbers here. Depending on the number of days to expiration, the average number of returns in terms of percentages, and the average number of days that it takes to get to that. And what he actually told me right here, it says, I imagine the best way to apply these numbers to future trades is to identify the days to expiration, match it up to the above to identify the average return in days to high, and place limit orders for the contracts at that median interval. So for instance, for a contract dated at this 141 to 240 days to expiration, place an auto sell at 142%, which is crazy, by the way, for the
It is.
majority of the previously bought contracts. If that price target is not hit within those 8 days, cut the majority of those contracts. So whichever comes first, number of days to high or return on options, follow that procedure for all Stacks AI options contracts. Yeah, again, thank you for putting this together. Obviously, this is something I wouldn't have been able to come up with by myself. I've been trying to get average numbers and trying to add more data to our back testing. For
Mm.
example, just a little peek here, I just was able to finish up the back testing for this last month of January. It is the 31st today. And so obviously, like I've always said, I haven't updated any of these. A lot of these down here probably are going to go higher. But we've seen, how you can get some pretty amazing returns if you pay attention, especially, for example, something like these ARM contracts came in succession, doubled up and everything. That one's 128%. And if we can take a look here, let me add that calculation right here. So right now, those ones are in the 108. Oh, let me double check that. 174. Okay. So that would have fallen right in between that range right now. And so that's actually pretty close to 142, 128. One thing I did ask Matt to help do today, he's going to share his screen, share some of the data that he's found is, what are some of the standard deviations? What are some of the highs and lows? If you want to play things a little bit more conservative, I'm assuming here probably there, that 128 would have been good enough to take in terms of the profits on that type of a trade. So what are the lower, what's the lower end? What's the more aggressive end, and also asking him to try to find and take out some of the outliers. One of the things I have noticed, especially goes pretty far back over here, but there are a few of these in terms of, 2000% and higher and things like that. We had a TSM, let me find that real quick, over 1,000% on Tesla and things like that. So if we take out some of these higher end returns, what does that data also happen to look like? Where is that TSM, by the way? I gotta find it here. Was
Yeah,
right here.
not
Yeah, right here. Almost a 30x return basically on this one. But obviously those are the outliers. This one they got in at $2 and the highs hit 69. So pretty crazy in terms of what Stacks AI has been able to show us. And now that we've got some more heads and some more brains to put together for this, I'm hoping that we can bring everybody a little bit more value and a little bit more knowledge in terms of what it is that we can do here. Um, all right, any input from you? You're welcome to share your screen, or if you just want to talk a little bit first, go ahead and let us know.
Yeah, absolutely. Thank you. Thank you very much. And I appreciate the introduction as well. I'm definitely really happy to help the community. I originally, of course, set out to kind of help myself kind of organize the data a little bit, try and figure out a playbook as far as how to, tackle these trades, which, the software is awesome, by the way. And obviously, I'm really happy to share it with you and the community as well. So looking at the data, I just kind of start off before I share my screen. So a lot of it, when looking at the returns versus the days to high, is not normally distributed, right? It's not a bell curve where you typically see your one standard deviation on either side of the mean around 68% of the data. Excuse me. And then outside of that, 95% at two standard deviations, and then around, I think it's 90, 99,
Mm,
98% roughly
yeah,
for your three standard deviations. So with that, it's kind of difficult to take the standard deviation itself and kind of use that as a metric for the data. Right. So those points, excuse me, the averages, both for the days to high and the average return, is kind of it's helpful. However, I found that because the data is not normally distributed, without removing outliers, which I started to do, I haven't completed that process yet. Um, it's best to look at the medians instead of the means for the data. So it kind of removes the thought of averaging in those outliers, I guess. So with that said, I'll share my screen here really quick.
good.
Cool. Okay, so I'll kind of talk about this a little bit. But in general, in order to get statistical significance, right, you need 30 data points. So with that said, essentially what I did was took all of the data and truncated it by days to expiration, as you mentioned, right, and then just create a spreadsheet for each one of those days to high and essentially looked at the data just by itself to kind of see if I could see a pattern. Of course, like we said, it's not normally distributed. So if I go through the days to expiration here, like I said, I ensured that there were more 30 or more data points to give us this statistical significance, excuse me. So for this one, this is 0 to 30 days to expiration. Really, in reality, it's only 0 to 9 days to expiration. There's no data between 9 and 30, but just for sake of giving us a metric here, 0 to 30 days to expiration. Kind of a even, I guess you could call that a normal distribution with the exception of this one outlier here. But looking at these other ones, 31 to 40, this is the percentage return versus days to high here. That's obviously not normally distributed. Looking at, the next metric here for 30 data points, you see we have 32 here, going from 2 to 33. Obviously, that's not normally distributed, right? We have a few outliers here. So essentially, I did that with each grouping, again, ensuring we had the statistical significance metric. So looking at that, I was trying to figure out a way to look at this data and try and give us, a good, I guess, metric. I keep using that word, but a good, valuation for what we should be expecting for our returns. So I kind of looked at this is Wikipedia for median absolute deviation here. So essentially, just a little statistics background, right? You can't use a standard deviation against a median, right? So instead of that, in lieu of that, you can do something called a median absolute deviation, which is pretty simple. It's just the subtraction of all of your data points. In this case, both our days to high and our percentage return subtracted from that median, basically. And then the median absolute deviation is the median of those values, essentially. So kind of doing a median of that. So I'll kind of explain that a little bit.
So
So looking at,
is it a median of the median from the median, right?
yeah, yeah, basically.
Okay.
And maybe this will explain it a little bit better. Let me see here. Okay. Okay. So kind of looking at, well, that's the interquartile range, excuse me. Let me see here. Okay. So I'm trying to get an image. These are all the questions that I was asking, as you can see.
Oh, okay.
So kind of looking at, kind of how to represent this here, for instance. So if you look at the median absolute deviation, essentially we are looking at the middle 50% of the data. So if you're
Hmm.
using or you're comparing that to a normal distribution, kind of that's what you're looking at. So really that's what I was aiming at getting here for the median absolute deviation. That was kind of my goal. So yes, you take the subtraction from the median, and then you take the median of those values to get your final, median absolute deviation. So
Cool.
for this is, let me just bring this up a little bit here. So for instance, this is my 31 to 140 here. So median absolute deviation, we have our median is calculated down here. So this is our median days too high, median from this column right here, median return right here, and then median absolute deviation. So essentially I subtracted AD2, which is our return here, subtracted from the median, then took the absolute value of that, essentially just to get it, on either
Okay.
side of that median. So took all of that, and then the median of those values, the median absolute deviation is that roughly 60. So then you add or subtract that from the median to get the middle 50% of your data. So as close to normal as you can get, even if the outliers are included there. However, this data would be a little, it'd be a little bit better after I remove those outliers. And
Yeah.
speaking of which, it's hard to identify them as outliers necessarily, given it is not normally distributed.
Hmm.
However, I figure an outlier we could just mark as, greater than 500%, if you may agree with that. And
Yeah.
that's kind of the method that I started doing. So all of these tabs down here with the removed is where I kind of
Okay.
started to
Cool.
remove the ones. I did it for all of them already, but I just need to finish calculating these medians and all of that for all of
Cool.
them, which I will do. But yeah, so kind of looking at that. So far, do you have any questions about kind of my process or like why I did that? I also considered something called feature scaling here. This is kind of, using a z-score normalization, but you have to bring in the standard deviation. I looked at doing robust scaling too, which looks at the interquartile range. Decided not to do that just because I felt this was a little bit better of a representation of the data. So yeah, but I'll go back to my
Yeah.
question. Do you have any questions for me, I guess?
No, I like it. It looks good. I mean, obviously, you've spent quite some time, going through the data, trying to figure out what it is that can help us basically make some better decisions. And of course, if it were a normal curve, obviously it would make things a whole lot easier, but that's not what we're dealing with here at this point. And I do agree with it. The anything over, I would say probably 500%. Like you can kind of see in some of these charts in here
Yep.
how there's some that are obviously outliers, that 3,000% on that one, the ones past 1,500, right, those ones probably could be reconsidered, but it's coming up with a strategy, and at least having something where people have an idea of, okay, well, on average already we know that for these specific days to expiration we already have these numbers to consider.
Mhm. I
And
think
yeah,
there's
it's a lot of numbers, but it looks great in terms of what work you've already done.
Yeah, thank you very much. I think, these graphs, I had checked them just before I came on here, but it looks like I need to change them because obviously these returns
Oh,
aren't
yeah.
correct. So, but the distribution kind of resembles that. So I don't know what's going on there. I apologize. But so I'm sorry. But yeah, kind of getting into looking at, I guess, the raw data after all those calculations have been done for those days to expiration ranges. So for 0 to 30, we have the median, which is 3, and then the median absolute deviation on either side of that was 0, roughly. There were only a few that were outside of 3, so roughly 3 days for that 0 to 9 days to expiration. If you recall, I mentioned they're only up to 9, not 9 to 30.
Okay.
So yeah, median profit for that 35.32, which I think is incredible over 3 days, obviously.
Yep.
And then the median profit percentage. So again, that's middled 50 centered around the median there, 16.82% to 53.82%. Um, so yeah, and again, this includes the outliers. Still, I still need to make those changes. So again, this data is different from the ones that you just shared. Obviously, that was looking at mean, both for the days to high and the average return. So these I think are a little bit more representative, excuse me, of the data. So yeah, as you can see, which kind of makes sense as you increase your days to expiration, the longer duration to hold the calls or the puts, mostly calls, um, increases. So with that too, the median days to high kind of increases around that too. So I don't really know how useful this is per se. It may become more useful when I remove the outliers. The data will get a little bit closer, right? But as of now, I don't really know how useful that is. It
Well,
could be
if
64
you
or
if you
whatever. But
consider it, if you
yeah.
consider it, at least gives you a little bit better of an idea of range. In like, for
Mhm.
example, median days to high for, that 141 to 240, you're actually looking at it that they're usually getting their highs within the first month and a half, right?
Mhm. Mhm.
So letting those ones necessarily drag out doesn't always end up in greater
Guaranteed.
profits or
Yeah.
guarantee more
Mhm.
profits,
Mhm.
because the thing here is, there's no software, there's no scanner out there that's 100%, right? If it were, trading would be easy, everybody would do it. We wouldn't have other skills or other jobs out there because everybody would just do the 100% guaranteed wins. In these situations, it's always all about probability. And these numbers here, I think, are great to see is that, okay, for example, yes, if they're buying almost 2 years out, right? That very last one, 501 to 760. Those ones they're holding for, if anything, to hit a high about half of the year, a little under half the year. Very rarely has it. I mean, I will also point out Stacks has only been around for a year at this point, a little over a year. So those numbers might potentially change down the line as we get more time, as we see what happens with some of those longer dated contracts, especially because as well, January just hit. We do have some of those from last year, which they were buying for 2027. So obviously those haven't had time to show us what they're capable of. Um, but a lot of these, for example, like, you tell anybody, hey, I've got this strategy where, and if you take a look at the median profits on the right, anything over 141 days, there's a pretty high probability you're getting over 100% on those if you're looking at the median, right? And 142% is the median for 141 to 240. Yes, 73 for that fifth row right there. 240, 190, 198, 124. So it looks like almost the sweet spot right now is those, right around a year, right? The 240, the 198. And the thing is, those are just the median profits, which means, yeah, a solid strategy we could probably suggest is that if you have enough to get into, let's use just a basic 10 contracts right there. You could set to take your profits close to or at those medians, right? Take off 200%, which leaves the rest to run to potentially hit that 3 or 400, which are still possible when it comes down to these numbers that we see. Um, it will be interesting. I obviously know that you're still working on some of these numbers too.
Mhm.
Once we do remove some of those, more extreme outliers, like obviously, we saw Tesla run up during the election and things like that. TSM, which is I think our biggest hitter so far with a
Mhm.
30x return. We take those out. Obviously, some of those higher ends of these will probably drop. The median's probably, likely going to drop a little bit too. Um, but show me another strategy out there that's giving you these numbers of 100+% return, on the regular, if you may, in these situations.
Mhm.
Um, like you were saying earlier, the majority, basically like 99% of what we have on Stacks AI at this point are all going to be calls. I think I've seen one put so far, which was a Tesla put, and that was a short-term one.
Mhm.
And more recently as well, we've generally only seen longer term, longer dated type of things. There are certain ones where I will point out if you see on Stacks AI a Stacks AI prints out something that's within the week or within 2 weeks, and it's a very high premium type of thing. I remember I think MicroStrategy was one, and more recently, those ones generally shoot up pretty quickly, if anything, and tend to go up quite quick. I will point out as well, I think there was one where there was a leveraged MicroStrategy one, MSTU, I think. And while it went up a little bit, it dropped pretty heavily, dropped pretty quickly. So you just got to be careful with and understand what tickers are being bought as well. So you know, great numbers, great data. I'm also very excited to see where what direction this, will go in the future as well as we get more data, as, we refine these things a little bit. Of course, this is just your first attempt of getting these numbers, and I'm very, very appreciative and grateful for all the work that you've put in on your end. Because this is all information that I think the entire community can use to, help their trading, help not only gain a little bit more confidence in what our software does and what those Stacks AI shoutouts are, but also get an idea because the most common question that we do get is, when do I exit? And it's funny to me because, for example, we've got people that are screenshotting 1 to 200% returns asking, should I hold on for longer? Because is this going to
Yeah.
go up more? And again, I like to remind people the strategy here is to make sure that you're minimizing the amount of risk that you're taking. It's a probability game, and as things go higher and higher, your risk does start to go up a little bit. And I always hate to see it when somebody has something very, very green, and sees it goes, down or back against them. I'll always try to take some of those profits off the table, especially when you have over 100%. It's definitely a situation where take at least half of it, take back what your initial investment was, and let the rest of it run if you really w would like to. But it never hurts to take those profits because, again, as we can see with Stacks AI, there's very likely another trade around the corner that you could probably get yourself into. If you sleep a little better at night, not having that on the table, those would probably be some of my suggestions to those people who are always asking, is anybody still in? Or are we still on this trade? Did Eric get out? We get a lot of those types of questions. But again, this data here helps everybody take, make better decisions as to what's going on here. So again, Matt, thank you for all that work that you've done here.
Yeah, yeah, of course. And I couldn't agree with you more. You mentioned the puts, and I think I mentioned that earlier. I think I saw for the 0 to 30, these were all
Oh,
the puts.
yes.
Yeah, that
Yeah.
string of puts that happened over like a 2 day period.
Hmm.
Uh, I think so maybe outside of
Yes,
that,
you
of
are
course,
correct. Yep.
elongated. Yeah.
Hmm. Yeah.
So I don't know if we'll see that again. But something to keep in mind. But yeah, I definitely agree with you. I appreciate those words, and I, it's always I was thinking while you were talking if there's a way to like look through flow and back test the flow somehow, what was coming through via the software and figure out, what is a prime setup outside of the, just seeing it as Stacks AI, check the box and, oh, I'll go after that one if it's a certain IV. Speaking of which, I didn't mention this, but I removed to start this whole thing to like start removing data points. I removed all the ones that had IV of greater than zero point 0.6 from a
Okay.
previous video
Good.
that you had done
Yes.
that I watched on YouTube, and also looking at the data, I made my own justification for that after looking and realizing, hey, maybe it's less likely to be in profit if it's or you have it's obviously the IV premium is much higher,
Yes.
and for that reason, carries
Hmm.
a larger risk. But so yeah, I removed that to kind of start this whole thing. So I think going off this data, but by first narrowing down from the Stacks AI list, that's generated, removing or not playing, rather, unless you would like, it's everybody's, make your own decisions. But I personally don't plan to play or use the software to play those contracts that are over zero point 0.6
Yeah.
IV. So.
Yeah, I think that's the smart play too, because
Yeah.
IV, I like to think of, when something's hot, IV goes up, shoots through the roof. We all probably remember the whole GameStop and AMC saga where, premiums for and IV premiums for those were in the 300 to 400%. So in that case, that'd be a 3 or a 4. In your case where you said you remove zero point 0.6 and higher, that's 60%. 60% IV means that the price of your contracts can fluctuate at a standard deviation of plus 60% and minus 60%, and that would be considered normal. And so when it goes up above 100, what you basically do have is you have kind of have the cards stacked up against you. It's more likely that once people start to move away from that trade, start to move away from those options, as that IV comes down, you have to gain a larger dollar amount of a move in order to balance out those IV numbers. So, that's why we're doing these back testings. That's why we're trying to find this extra data. From my trends video, that's something that I definitely noticed and something that we started to make adjustments on is it doesn't make sense to get into something with a 1.0 IV and higher because that, yes, while more people might jump into that trade, jump into that stock if more news comes, sooner or later that IV is going to start to drop. And so it's kind of more of an uphill battle. And the larger the IV is, the bigger that slope happens to be. Um, and so yeah, having something with an IV under zero point 0.6 is definitely a suggested, strategy or something to keep an eye out for. And one other thing, I was just trying to rack my brain in terms of some additional numbers and additional data points that we might be able to look for. One thing I've always wanted to kind of get an idea of is we have the calculation of the number of days that they're purchasing. Uh, Compare that to the number of days that would be left on the contract when we hit a high. So that would give us an idea. Are they necessarily holding out to that last month? Are they holding out to the last 3 months of it? Because with options contracts too, especially a lot of these that are out of the money type of plays where it's a higher risk situation, your theta decay starts to eat away at the pricing of your contracts faster in that last month. And even more so, like, last 3 months, it definitely ramps up in the last month and the last week. So that's also why, when you see those weekly type of situations, you have to remember these large institutions and these big money players, for them to, it's not just one person sitting behind a screen clicking, I want to buy this. There's probably multiple people that are signing off and saying, hey, your numbers make sense. The data or the information that you happen to have on what's going on makes sense for us to take the risk on those high risk and high theta decay type of trades. So, keep that in mind. When I definitely noticed that MicroStrategy was one that sticks out to me because it was more recent, where they basically purchased for the I think the end of the week, or it was like less than 14 days is what it was. And on Stacks AI, we're not going to see too many of those. You'll see a lot of them happen to be 6 months out to a year or more. And so when you see that type of urgency and the word we use, as well as the aggression of that trade, nobody's just going to throw $1 million at that type of trade right off the bat. And looking at the back testing for that MicroStrategy, once it hit the top, that was a 14x return in a matter of like 3 or 4 days. So you know, again, there's a lot of numbers. Obviously, these data tables and things are like that. Take some special people like you and I to actually sit here and stare at these numbers for hours on end. But the information that we have to share, I think, that's why we record these things. That's why we share them on YouTube. We want people to understand. Um, you know, you don't have to be the best at your numbers, but if you listen to the data that we have, the data is never going to lie. All the back testing we do, we spend hours and hours on this to try to get you guys this information. Put it to use. Let us also know, what you found works, what trades you noticed, that went up, or even especially the ones that went down. It's always important for us to understand and to realize and learn from certain mistakes that maybe did happen in terms of what's going on. But again, Stacks at this point is over a 90% hit rate with on average over 200%, like 240% returns. I still have to do this month's back testing and go through the rest of, I've got over 200 tickers and 200 prints to go over and review to see if anything went higher. But again, the numbers there are put together to help all of us make some better decisions with our trades. And one other thing too is the Stacks AI software. I like to think of it as a foundation. If you have a charting strategy, you are also watching what Stacks does. What I like to do is if I see a Stacks print, I'm not necessarily going to get in right away. If it was something I've already been monitoring, something I know, hey, this week if I see, these prints come in, there's stuff that's supposed to happen with China, with BABA, with FXI, those, and I see those come in, then I'm more likely to get in a little bit quicker. But a lot of times what I'll do is I'll keep in mind, hey, I saw that I saw like K-Web print. I saw MicroStrategy come in and they spent $2 to $3 million on it. And over the course of the next day or two, or even up to a week or more, what I like to do is I'll check those tickers again. I'll go double check our flow scanner, see what the ratio of my calls to puts happens to be. Because if they're only buying calls, right? If it's like 15 million calls to zero puts, then those are indicators that this is a higher probability trade than just, a lot of people get into these things blindly. You're flipping a coin. And I'm saying like Stacks AI, I've seen it where it goes down 70, 80% and comes back to be a 3 or 4x return, down the line. But it's never pretty to look at your portfolio and to be sweating it out through those situations. The question that, a lot of people have is, should I get out? Should I get out? Even when you ask me, the first thing I'm doing is I'm pulling up that Stacks AI or Stacks, and I'm going in there and I'm at least looking up the ticker, checking the buys to be, the first thing. Yes, it helps to look at some of the sells every now and then, see if people are really getting out of their position, if they're fleeing from that ticker. But checking in to see if they're buying, if they're still buying, and if it's a consistent buying. Because, there's this thing they say in stocks and with options, there are many reasons for why you would sell, but there's only one main reason for why you would ever purchase, is because you expect that price to go up. And having these tools, the software that we have put together, and all the back testing that we've done, I think the results are really starting to show and speak for themselves in that situation. A question for you too. How long have you been using Stacks, and how has it fared for you so far? I know you've been focused on a lot of these numbers, but have you taken any trades yet? How has that turned out for you?
Yeah, yeah. Thanks for asking. So I've been with Stacks very, I started very recently, less than a month actually. Yeah, when I asked you for the spreadsheet, I had just which I don't know what date that was, but fairly recently. Was the first or second day that I had access. So after I had seen the video on your YouTube video online. But to answer your question about whether I've taken trades, the answer is yes. I have seen some success with the trades I have taken. And I think it's having this data will give us a little bit, myself, yourself, those in the community, more conviction as far as when to identify when's best to sell based on the days to high or profit. But yeah, I took the Baba. I know everybody in the community is raving about Baba. You mentioned it as an example a little bit ago. And I took that trade and I was in it, just off of looking at my Twitter feed and everything, some other folks that I follow, and I took that trade and made a good chunk of money off of it. And they were the same contracts that were put on Stacks AI, which gave me even more conviction. And of course, I think that print came through as a Stacks AI print a while back. I believe it
Hmm.
was December. I didn't
Yep.
get into the trade then. Obviously, I didn't have access then. So I got in, a lot later, and hit the majority of that move. However, I sold way too early. Uh, yeah, that's okay. I didn't leave any
But
runners. I could
but
have.
but
It is
what's
what it is.
early for you? Like for some
Yeah.
people selling early, I understand. You sell early at like 80, 90, 100% and you feel bad
Yeah.
because you didn't get the multiples. But
Yeah.
can you really be mad about 100% return on something you held on for less than 2, 3 weeks?
Yeah.
The S&P even through the last year, isn't anywhere close to that type of return if you're going with those types of trades. So yeah, I mean, I'll tell you this. If you've looked through a couple of the previous interviews I've done with other people, one of the hardest things with stacks is trying to fight your own greed, right? The markets definitely operate off of fear and greed.
Mhm.
And one of the things that, it's funny, Chemo's nickname is FOMO Chemo, it's fear of missing out, because again, that's a big part of this. You said sold too early, but getting 100% return, is that really too early? Right? Yeah, I mean, I get it. Yeah, I saw some of those contracts go for, I think, 4 or 5x return at the end of the day.
Mhm.
But if it helps you sleep better at night and helps you, keep your, trading's very draining when it comes down to it. Can quickly lead to gray hairs on your head, even for those that are pretty young. But understand that the goal here is you got to learn how to beat your own psychology of things. And a lot of times I understand Stacks is a great tool. There's a lot of profits to be made, but you also have to learn to curb that greed. There's this thing that I like to remind people of is you're either going to you'll never time the top, if that makes sense. You're never going to time it to get the very maximum amount of profits. If you could, this would be way too easy. Um, but there's a lot of times where, either you sell early or you sell at a loss. That's usually what ends up happening, especially with options trading. And especially when you're dealing with things like, not 0 days, but just out of the money types of options. So, I'm sure there's going to be plenty more trades as Stacks continues, as you continue to use the tools. I'm happy for you. The returns that you made on Baba, I'm glad you listened to it on there. I definitely, I made a chunk of money myself off of those, and a lot of it was just understanding that the tool and some of the best traders understand how to use the tool and try to keep their own psychology out of it, if that makes sense.
Hmm.
But the numbers that you've shown, again, I'm extremely appreciative, very grateful for what work you've done for us. Um, a, Another one of our members helped out during the trends video, and his strategy is to take profits at 25%, right? Which again is solid already to begin with. If you can get it within a few days, within a few weeks. But it looks like that with the calculations that we have. It's very possible he could maybe even bump that strategy up a little bit closer to 30, 40, 50%. As we continue to get some more numbers out and some more data in our back testing, I think we'll start to get a clearer picture. And again, I've always said this is just the first year of Stacks. Like we've just wrapped up our first year. We released December 1st of 2023. So, Stacks AI is only 14, 15 months old at this point. I think it'll be very exciting to see what direction and how much more it'll continue to let us know, because it's not just us making not just the stacks making decision, it's taking the input of what the big money institutions, what they're buying on the dark pool, and allowing us to filter through that, right? We try to take out all the extra noise and present you guys the data in a very digestible manner. And keep in mind, like, I wish it was completely brainless. But obviously, if you are able to use your brain a little bit along with Stacks AI, it's definitely a great tool to use for people. I know there's some people that want to have their hand held, want to just follow along. There's those people as always. But if you're truly looking to learn with, how to do options and how to trade the markets, Stacks is probably the tool to help do that. And so, again, thank you for all that extra work that you did. We'll definitely be in touch about, updates. Once I finish up the back testing for Stacks AI this month, I'll definitely send you an updated sheet to see what other data we might be able to get from there.
Yeah, that sounds great. Be happy to do that for you in the community. I appreciate you saying that again. I'm definitely very happy to put this out there and help others, help myself as well. And yeah, I definitely really appreciate that. So yeah, thanks for the opportunity, I guess,
Yeah.
to share that. So
I'm sure we'll have updates in future videos as well. For those of you that are watching on YouTube, please help me thank Matt here. Leave some comments down below. Give us some likes. And if you're in Stacks, you can also go thank him in the Discord chat as well. GeoMarine93, Matt, thank you again for everything that you were able to help contribute. I know this was kind of a long video, but there was a lot of good data for everybody to see.
yeah, absolutely. And thank you again. I guess, after running that additional analysis, maybe next on the turnpike, so to speak, would be looking at the politicians' trades and seeing how those fare as well. I know we didn't talk about that at all, but yeah, maybe that's also something to consider too. I don't know, looking at their performance because they've obviously got a ear to the ground, so to speak, about what's
One
going on.
thing, one thing with politician trades, I'm starting to notice,
Yeah.
and this is something that's been a more of like recent trends with, just people being able to trade on their phones, these apps that are popping up that are able to track certain people. One of the things that I find very interesting with politician trades is, we'll use Nancy Pelosi as an example, where there's the psychological phenomenon of the self-fulfilling prophecy. what's actually happening here, I'm going to use, Nvidia is obviously one big one where she hit it big. And it put her, it was her rise to fame, right? And once everybody started to realize that, you hear this news, you see that what they've done, and all of a sudden everybody's legging into those trades together. And that's just creating extra buying pressure. That's now just reinforcing the thought that, hey, all of her trades are going to be profitable. The most recent one with TEM, I think the call options she has are up 200% already. The stock itself jumped about 70 or 80% within the week that her trades were announced. I do also know that right now, I think there's some legislation going on that maybe they might not have to report these trades anymore in the future. We'll see if that gets passed and things like that. But ultimately, it's, now that we do have our politician tracker, we saw those trades come in over the weekend before people start reporting on them on Monday. And yeah, I definitely, you know, I've still got quite a task in front of me. I've got 240 of these Stacks AI prints I still got to review. But if like, just like, how you got involved as well, if there are people listening that are willing to help us out, people that have access to stacks or people that would like to go through those numbers, people that are a little bit more familiar with Excel spreadsheets and things like that, please let us know. We're more than happy to, share some of those things so that hopefully we can get some better data for everybody to use. I know there's other platforms out there. I think Unusual Whales is probably the most common one that you'll see out there. They did put out some a returns chart of, which politicians have the highest returns and things like that, depending on what committees they happen to sit on and what they're able to make decisions upon. So, yeah, we've got stuff ready for the future. I definitely have my work cut out for me, and same with you over here. But yeah, it's something that I think would be very useful for our users to, have and to contribute with.
Definitely. Yeah. And sorry to continue the interview. I know
No,
it's
that's
going to talk
perfectly
about
fine. I don't have to get going just yet.
that. I gotcha.
Yeah,
Yeah,
it's a lot of information that I think is all worth spreading. That's what I'm here for as well. In Investor Central Club, the Discord, we also, I started getting involved just like you. I got involved because I saw Chemo. He was on Instagram. He's a buddy of mine from back in college, and messaged him. He showed me how to do options trading. I started to dabble in it. My background's actually in education and teaching.
Hmm.
I teach math. I'm a basketball coach. And so, a lot of the math side of things, I was just trying to help people make sense of the numbers behind, the trades and the unusualness of certain things when it comes down to options trading. And sooner or later, Chemo actually gave me my own channel in the Discord. We ended up teaching a Investor Central Club Academy, which is also part of one of the services that we offer. And then he brought me on to also help out with the development of Stacks and Stacks AI. And so, it's been a journey. I've been around since 2020 to 2021. So, it's you know, I got my foot in the door just like how you did right here, is just started to ask for some information, seeing what I can contribute. And who knows what Stacks and Stacks AI might look like 5, 10 years from now, right? I still think we're still in the infancy of it right now.
Yeah, yeah, I definitely agree. And from someone I've been trading since 2019, actually, and had a lot of ups and downs, mostly downs, but a lot of struggles in the market. And I just think having this guidance is quite helpful. Obviously, I know we talked about it a lot, and I think that message kind of rings clear, of course. Um, but yeah, definitely useful tool. Um, so yeah, I think that's all I had, unless there was anything else that you
No,
yeah, okay.
I I know I've said it over and over again, but thank you again for all that work you've put in. I'm no stranger to spreadsheets and numbers. Sometimes staring at those numbers start to hurt my head a little bit. I gotta step away from the screen. But again,
Yeah.
you did a lot of extra work there for us. And I'm excited to see what other numbers we'll be able to share with the community as time goes on. Just
Mhm.
because, again, it's very useful for those people that are, I get a lot of people asking, should I stay in? Should I get out? And, my philosophy is if it's good enough to screenshot and share, you probably should take some profits.
Mm,
Um, but again, seeing how powerful stacks can be, that people are taking screenshots at 1 to 200% and still being mad they didn't hold on for longer. I think that speaks for itself.
yeah, yeah, I definitely agree. Um, yeah, and I guess to tag on one last comment, tag on to what you mentioned, if there's anyone who in the community who has ideas about how to perfect this analysis a little bit more, who's a statistician maybe in the group, outside of the statistics that I've done here a bit, I think you know, raising a hand and speaking up, I think would be really helpful. Maybe given giving a recommendation as far as how to approach this that may be different than what I've done here. So yeah.
Completely agree. Yeah.